a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about BlackRock's ETF filing and what that means for Bitcoin. So, Bitcoin is up almost 20% since the filing of a spot Bitcoin application by BlackRock. And in fact, it topped $30,000 last week for the first time in 2 months, though it is still down more than 55% from its 2021 peak. BlackRock, as we know, is the world's largest asset manager with about $9 trillion in assets under management, and it offers more than 400 US-listed ETFs. And after BlackRock, other issuers, including Bitwise, WisdomTree, Invesco, and Valkyrie, they quickly joined the race with their own filings for products that would be similar to the iShares Bitcoin Trust, because no one wants to be left behind. The first mover advantage is huge in the ETF world, as we have seen in many cases. So everyone wants to join the race. Then tomorrow, an ETF buy for volatility shares, which will provide 2 times leverage exposure to Bitcoin through futures, will start trading. The ticker symbol will be BITX. Another important development that we learned last week is that a new cryptocurrency exchange, which is backed by Citadel, Fidelity, and Charles Schwab, has started trading. It is called EDX Markets. So this indicates institutionalization of Bitcoin, acceptance by these major institutional managers that is good for Bitcoin. Now, let me quickly show you this ETF BITX by going to the code page on Zacks.com. So as I mentioned, it will start trading on Tuesday, June 27th, and it will provide twice in leverage exposure to Bitcoin futures. It is going to be very, very, very volatile, so be careful if you want to trade. But you can learn more about this ETF by going to the website. Now let's go back to our presentation. So why BlackRock applied for a spot Bitcoin ETF now? And there are many theories being thrown around, and they are saying that BlackRock probably knows something because BlackRock is huge in the ETF and asset management world, and their record of approval is 575-1, which is mentioned by Bloomberg's Eric Balchunas. And they have many people who used to work for SEC earlier, and there are people who used to work for BlackRock, and they are working for SEC now. So that is why many people believe that BlackRock probably knows something. And in the past, the SEC has rejected more than 30 ETFs, spot ETFs that would actually own Bitcoin over the past about 10 years, since Winklevoss brothers filed for the first such ETF almost 10 years back. And why they have rejected? They have expressed concerns regarding fraud and manipulation, and what they would prefer to have is a regulated market of significant size for which there is a surveillance sharing agreement, so that fraud and manipulation can be detected and deterred. Now, CoinDesk pointed out that BlackRock's filing includes a surveillance sharing agreement with NASDAQ. So it remains to be seen whether that would satisfy SEC, and SEC would approve this ETF based on that surveillance sharing agreement. Now, in the past, recently, and the SEC has approved many ETFs that own Bitcoin futures. The biggest one is BITO. We'll take a look at that ETF in a bit. And they have approved those ETFs because Bitcoin futures trade on regulated exchanges like CME. There are many spot crypto ETFs, ETPs that actually own Bitcoin, Ether, and other cryptocurrencies that have been trading in Canada and in Europe, and they have been doing what they are supposed to do. So that is why many think that SEC's stance did not make much sense, but that was the regulators' reason for denial of applications so far. So another major players in this the entire scenario is Grayscale. So Grayscale operates this large, huge Bitcoin trust, GBTC. This is a grantor trust which trades like a closed-end fund. It is not an ETF. Many confuse this with an ETF, but this is not an ETF. And because it's not an ETF, it doesn't have the creation and redemption mechanism that ETFs have. And because of that creation and redemption mechanism, basically to meet the supply and demand, ETFs are able to keep their prices very, very close to their net asset values or NAVs. So you will very rarely see an ETF which is trading at a price which is at a significant discount or premium to its NAV. It happens rarely in certain circumstances, but we are not talking about that right now. But GBTC, because it's not an ETF, it has been trading at either massive discounts or premium to its NAVs, and that harms investors. According to the Wall Street Journal, the average discount this year has been about 40%. Now, this has come down since we saw this filing, and Grayscale has a lawsuit against SEC because they want to convert GBTC into an ETF, and a decision on that lawsuit is expected this fall. And legal experts say that the chances of winning are in favor of Grayscale based on the hearings so far. It still remains to be seen whether the SEC will actually allow the conversion, because they may still reject the conversion on some other ground. So let's take a look at GBTC quickly. So again, you can go to the code page on Zacks.com, and using the link, you can go to GBTC's web page. So GBTC is very expensive for investors, 2% fee, and it is huge, 19.3 billion in assets under management. You will see that market price is this and holdings per share is this. So this discount around 30% now, average around 40%, as I mentioned earlier. And so that is why having an ETF trading in the US will be great for investors. Now, I also wanted to take a look at the other best option that is currently available to investors if they want to invest in Bitcoin. So it is the Bitcoin Strategy ETF, BITO by ProShares. It is currently the most popular ETF in this space, and in fact, when it launched, it was quickly able to gather 1 billion in assets within 2 days of trading. Very, very popular with investors then, and Bitcoin was surging then. So that also helped the ETF gather over $1 billion in assets. Then the assets went down, and again, this ETF has seen a lot of inflows over the past week, and now AUM has gone up over 1 billion again. So this is also expensive, 95 basis points, because it invests in futures. The futures trade on regulated exchanges. That is the reason rationale given by SEC in approval, giving approval to futures-based ETFs. So far, it has tracked Bitcoin prices very closely, because when futures-based ETFs launched, there were many concerns about roll costs, because futures have to be rolled over. Now, the two things have happened. Bitcoin has been down, so that is one reason why roll costs have been low. And also the futures market is maturing, so that has also resulted in decline of these roll costs, and that is why this ETF has been able to track Bitcoin prices closely so far. So this is the Bitcoin ETF. In fact, I did a podcast with the brochure some time back. You can listen to that. You can read our articles, report, etc., and go to brochure's webpage to learn more about this ETF. They have some good research. You can read the research and all that to see what it holds and its strategy, and if you want to invest, why you should invest in this ETF. But we will keep an eye on all the developments, and if the SEC finally approves a spot Bitcoin ETF, that would be great for the cryptocurrency market in the US and for investors. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Also, make sure to subscribe to all our videos, our video channels, so that you do not miss anything. And I'll see you next week.